Hey guys, welcome back to my channel. So I want to make a quick video that's going to explain what going long is and what going short is. Now you may have seen these terms thrown around when you're perusing through crypto related content, and it's going to be a little bit confusing because there's so many different words to describe very similar things. So let's just get into the bread and potatoes of the video, and I'm going to show you a very popular derivatives crypto exchange called Bybit. Now Bybit is very popular for these kinds of instruments. Let me just quickly pull this up for you. And what I've got here, I'm gonna go over here. That's better. What I've got over here is what are called inverse perpetual swaps. Now this is the financial instrument that one can use to go long and short on the market. Going long means that you're betting that the price of Bitcoin is going to go up, and going short is betting that the price is going to go down. Now typically, if you wanted to take advantage of the price going down, let's just say you had some kind of insider information, the price is definitely going to go down, and you wanted to make money on that, if you already have Bitcoin, you'd simply sell your Bitcoin and buy again at a lower price. That way, when the price goes back up, you would have more Bitcoin, right? And the reverse is true. Let's just say it was imminent that the price was going to go up. If you had, say, US dollars, you would buy Bitcoin, and then when it goes up, then you sell it, and then you've got more US dollars. So this is the idea that you would usually have. However, when you want to do it via trading inverse perpetual contracts, it allows a wider variety of options to open up. So instead, what you can do is, if you wanted to go short, you make money the moment the price goes down, and then when you close the trade, those gains or losses are instantly realized. And if you go long and the price goes up, the gains and losses are instantly realized until you close the contract, right? And I want to give you an example, because one thing that's very critical to understand when you're doing this is the idea of something called leverage. Now, if I click on this calculator button here, it's going to show me a calculator that's going to show me a few little angles here. So one thing is called leverage, right? So if I decide that I'm going to put in, okay, so let's just say it's one, and let's just say I've only got one Bitcoin, and this is the current price. And if the price goes up to, say, 72,000 from its current price of 66,000, then my profit and loss will be 5,900 USDT if I sold at that exact price, right? But what happens if I increase the leverage to 2? Well, the quantity will of course increase by 2. Because if I've got one Bitcoin, I can use that to get twice as much leverage if I decide to increase the leverage, and that'll allow me to get twice as much profit. So as you can see here, my profit has increased by about 2 times the amount I would have if I only used one Bitcoin. Likewise, what if I go 4x? And again, that will give me 4. Basically, I'm trading with the value of 4 Bitcoin. And as you can see, I can now make 23,000. What if I go 10x? So I'm trading with 10 Bitcoin, where I originally only had 1. I can now make 59,000. 59,000 when I've only got 1 Bitcoin. However, what is the risk when it comes to trading with Bitcoin that you don't have? Well, you're subject to something called liquidation, right? So if I'm trading with spot, which means, I've actually just got 1 Bitcoin, I'm not trading on the derivatives markets. If the price goes down, nothing bad will happen, right? But if I'm trading with funds that I've essentially borrowed, which is what trading with leverage is, if the price goes down to a certain point, that means that I'm going to be subject to something called liquidated, which means the money that I put into this trade will basically just be taken away from me, which won't happen if you're trading with spot. So if I'm trading with leverage, and I've got I'm trading with 2x, I'm trading with 2 Bitcoin, I've got 1 Bitcoin and I'm trading 2x, right? if the entry price is $66,000, if the price went down to $33,000, I would lose all of my money, right? That is the danger of trading with leverage. You can lose all your money if you decide if the price goes down to that liquidation price. What happens if it goes down? What if I use more leverage? Well, as you can see, the liquidation price increases. So the more leverage I use in order to make more profit, the higher the liquidation price is. So this is the risk of going with leverage. If you're trading with leverage, the more that you use, the more money that you can make. See, let's just say again, I want to use this example again, just to so if it goes up to 72,000, and I'm trading with okay, so imagine I've got 1 Bitcoin, I'm trading with 10x leverage. You can see I make a huge amount of money if it goes up just a little bit. If it only goes up to $72,000, I'm trading with 1 Bitcoin. If I use 10x leverage, look how much money I can make. I can make 59,000 US dollars. However, the flip side is that if it goes down just to $59,000, well, pretty much 60k, then I'll lose my entire position. And you can play with the calculator a lot, so you can see how crazy things can get. If I try to use 20x leverage, if it just goes down to 63,000, I'll lose everything. But on the flip side, yeah, if I want to trade with 20x leverage with 1 Bitcoin, as you can see here, I would make a whopping, whoops, what's going on here? Oh, I guess it won't let me trade with more leverage. What about if I just went with 15? Okay, I guess the most like it will let me trade is with 10x, right? So as you can see, this is a very high risk, high reward way of trading, and I want to explain a little bit more about this and the overall philosophy behind it. So the thing is, when you're trading with this kind of instrument, you have to understand that fundamentally you're gambling. Now, everyone likes to believe they've got some kind of insider scoop on what the price action is going to be. But when you look at the price chart, which I'll pull up here, when you're looking at all these lines, when you're looking at the graph, what you're really looking at is a consolidated version of everyone's mass psychology. All these people, all these trades that you see on the right here, all these buy and sell orders, they're all guesses by individuals as to what the price is going to be at a later date. And everyone is competing with each other. Now, the reason why it's a competition is that only one person can be the one that can sell at the perfect price. Only one person can sell at the very tippy top here if he's going long, and only one person can sell at the very bottom when the price is low. When that person sells, the price is obviously going to go down, right? And then the next aim, the aim then is for someone to be second place. Then they're going to have to sell at the second best price, right? That's going to cause the price to go lower. And if someone wants to, again, try and take advantage of the price being up, then they're going to sell, and then the price is going to go down. So whoever is fastest to the point is going to be the one that succeeds, and whoever's the slowest is the one who's going to be the least successful. They're the ones that are going to have to end up selling at a price lower than when they bought. But the reality is that this game only functions if people make a loss, because only some people can sell higher than when they bought, and for the people that shorted, only some people can actually short successfully in the same kind of manner. So when you're doing this, you have to understand you're competing against all these other traders who are trying to outcompete the people who want the same outcome. Everyone wants to buy low and sell high, and if you're going to compete with all these people, it needs to be understood that it's a zero-sum game. Now, I think that would seem like almost a fair. That would always seem fair if it was just like, one person versus one other person. But the reality is, most of the traders who are very successful at doing this in the long run, they have such an enormous advantage over other traders. Okay, first because they've been doing it longer, and they've got such they've been skilled in this arena. They've gone to university for it, and then they've got experience in this field. They've gone to they've traded at trading firms that have specialized in this kind of stuff, and they're also likely to have huge amounts of money. So I've met a lot of people that have traded in these in these fields before, and you're dealing with people that will make millions of dollars a year trading in this stuff. And if you ask them how much money they make, they'll casually say, yeah, I only make like 10% a year, right? Like, these are people that are not like in it for they're not in it for the fast gains, right? They've got a very long-term strategy. They've often spent like tens of thousands of dollars on algorithms. They've spent tens of thousands of dollars on analysts who've been in the market for dozens of years. And the chances that a regular person is going to be able to break into this market and successfully outcompete these other people is very unlikely. And I want to make another point as well. For one person to make a 10x, more or less speaking, 10 other people have to lose. So this isn't like a 1v1. This is like one person versus like, so this is like 10 people versus like the top traders who continually win. This would almost be like if you're playing a video game, right? Like if you're playing like, say, League of Legends, right? You might be playing ranked, right? I don't know if you're familiar with this video game, right? But if you're playing like in a ranked game, right, you're going to be versing the people who are of a similar rank to you, and that gives everyone a pretty fair ability to win the game. However, there are other games like PUBG, if you're familiar with that game, which it's like a first-person shooter where there's no ELO system, right? There's no ranked system. For the most part, everyone is playing with each other. So you've got these hardcore people that play 16 hours a day at the internet cafe in Asia. They have no life. They have 10,000 hours of playtime, and they're going to play the same game with people that just downloaded the game from Steam yesterday. And the people that just downloaded this game, the chances of them winning the game is virtually zero. And that's what you have to understand. When you're stepping into this arena, you might get some good advice from, I'm being pretty generous with that, but you might get some advice about technical analysis from some kind of TA YouTuber who says, we've got like some kind of reverse head and shoulders, we've got a sloping triangle, it's going up on the EMA ribbon, and if we look at these on-chain analytics from Chainalysis, you can see the price is going to go up. There's a 60% chance it's going to go up. As long as you use a stop loss, etc., they're going to give you some advice about, why you should go in, but the chances that you're going to beat these people are slim to none. And you might get lucky and you might win from time to time, but if you play this game in the long run, you're ultimately just feeding people who are, they've been in this game, way too long. The chances of them losing is very low, and the chances of you winning at their expense is virtually none. So that's why I'm really strong in my recommendations to people in this channel who come here and who earnestly take my advice to never get involved in these kinds of derivatives tradings. The chances you're going to win are astonishingly low, and if you do win, those wins are you're not likely to win in the long run, because this is a competition that is just far too competitive. There may have been a time where there just were fewer people trading in this space, and you may have had a chance, but now is not that time. You're up against millions of traders, many of whom have been doing this stuff for such a long time, and it's very unlikely that you're going to win. So yeah, my recommendation is to not play games that you can win. If you're bullish on Bitcoin, do the honest thing. Play the long and honest game of just buying Bitcoin and just holding it, putting it in a cold storage wallet, and don't trade with money that you don't have. Trade with money that you do have. Put it into spot, take your Bitcoin off the platform, and just hodl it. Wait for 10 years. Bitcoin's already the best performing asset of all time. All you have to do is buy it and hold it, and that's all you really need. You don't need to be trading with leverage. This is not a game for you, I promise you that. So thanks a lot for watching, guys. If you like this no-nonsense advice about crypto, make sure to subscribe to my channel. The focus of my channel is about how to debank, and how to help people trade without KYC, and how to use peer-to-peer cryptocurrency exchanges to help you debank, how to buy cryptocurrency using a variety of different payment methods, and also how to make money using peer-to-peer cryptocurrency exchanges, which is an honest business. The idea is that you're going to sell Bitcoin above market rate because you can help someone access that crypto via a payment method that is not provided on centralized cryptocurrency exchanges, or you're going to provide crypto in by helping someone. So you're going to provide crypto without requesting the person buying from you. You're not going to request KYC from them, which is something that centralized exchanges ask for. So if you provide this service to other people, you can provide this service above market rate, hence making money in cryptocurrency. It's an honest living, and it's one of the best ways to make money in cryptocurrency. You don't have to be involved in this kind of gambling activity, whether you're trading with leverage or buying shitcoins. I think these things are very bad for you in the long run. So make sure to use my referral links in the description down below, and I'll see you next video.